Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Wednesday, March 28th, 2012. Well, a change of trend today, and the previous day's trading we had the small black-bodied candle following the large extreme day where the bulls had very strong control of the market. The next day we saw the black body with the sellers making net bearish progress. And today a change of trend with the candle that's made a lower high and a lower low. The sellers have been able to extend the amount of bearish progress they've made on the day between the open and the close, and that is a bearish sign, so it means that they've had some momentum throughout the trading day. But we do have this long shadow on the bottom of the candle, and that represents the sellers losing commitment around the 1400 level. And the 1400 round number level has been a previous area of resistance for this market and is now holding as support. It held as support in a minor way here, which was subsequently broken, and today we've seen price rejected from that area. So that's probably the most significant area of support for this market going forward. In terms of the position of the close within the range, the close is roughly around the midpoint level, so neither side has taken control. So that does raise some doubt about the potential for the sellers to continue the trend to the downside. But having said that, the buyers really aren't showing any strength either. So it's really a story today about how the sellers attempted to take control, they lost control, and they also lost commitment, but the buyers have failed to establish control in this market. So it is a fairly indecisive scenario that we're looking at. So there is possibility for a change of trend, but also possibility for a continuation of the trend to the downside. But the 1400 level is very important if that's going to continue to the downside. In terms of Ichimoku, the market's bullish in all three time frames. We're trading above the cloud, above the Kijun-sen, and above the Tenkan-sen, only just above the Tenkan-sen, but we have been rejected from the Tenkan-sen as well, so that's quite important. Looking at the Kijun-sen, that has turned flat and price action has been attracted back towards there, so there is still a possibility that this trend will continue down, but as I've said, the 1400 round number is very important. The Chikou span is supporting the bullishness that we're seeing in all three time frames. So bullishness in all three time frames, but the buyers really aren't in the ascendancy in the terms of the short-term dynamics. Let's watch the high of the current candle for a potential higher high and higher low and a test of higher levels. There isn't any major support in this market until we trade up to any major resistance until we trade up to around the 1440 level. So that's a level that that could easily be approached if we see the buyers come back into this market strongly. So obviously that high and the area around the 1400 level are very important. Next, moving to gold, and here we see establishment of a trend to the downside in this market as well. We saw that with the S&P 500 and quite a fair amount of bearishness in this market today. A fairly large black body where the sellers have closed down below the midpoint level, not quite towards the low, but between the low and the midpoint level, so they have taken control, a moderate form of control, but that is still fairly bearish, and it means that the sellers are supporting the trend to the downside. The size of the body of the candle, the black body, has extended greater than the previous, so that highlights some bearish momentum in this market as well. Having said that, however, we do have a shadow on the bottom of the candle, and the sellers lost commitment below the Tenkan-sen, so we've seen where the Tenkan-sen, the green line, has acted as support for this market, and they failed to close below there. And they failed to close below there 2 trading periods ago, but also the low of that candle held as support for the market as well, so that's an important level, roughly about 1655, 1654, and at the Tenkan-sen, which is trading roughly about 1663. The market did close down below the 1667 level, but only just, and that was a previous area of support and then resistance. So moving forward, that will offer itself as resistance if the market does trade up to there, and we can see how the current candle is developing. It is already testing at that level. In terms of Ichimoku, the market is neutral in the long-term time frame by trading within the cloud, bearish in the medium-term time frame by trading below the Kijun-sen. That Kijun-sen is still pointing flat, so there is a possibility that the market could retrace back towards there after this bearish activity that we've seen over the previous couple of days. And the Tenkan Sen is indicating a neutral market in the short-term time frame by the market trading at the Tenkan Sen, or relatively just above there, but pretty much at there. If the market does rally from here, and as I've said, the short-term dynamics aren't supporting the buyers at the moment, but that could turn around because of the flat Kijun-sen. We do have strong resistance up around the round number 1700. If we do see the market sell off, then we should watch the Tenkan Sen again around 1663, and also the bottom of the cloud will come into play about 1651, and we have a previous area of resistance at the 1643 level, a level that was tested on 1, 2, 3, 4, 5, 6 occasions, and the market failed to close down below there. So that's a very, very important level. If we do see the market trade down below there, we would have a breakout below the cloud, which would be bearish, and we do also have strong support down around the 1625 level. So in big picture terms and the short-term time frame, a market that's quite neutral, bearish in the medium-term time frame and in terms of the short-term dynamics, but we have solid support down below and fairly close by resistance at the 1667 and then up to the 1700 level. Next, moving to light sweet crude oil, and here we see a change of trend in this market as well. So we're seeing similar activity in the equities market, gold and in oil, and a black-bodied candle with a lower high and a lower low, so a downtrend in the first time frame. Previous days trading, we had a spinning top type candle around the important 106.95 level that's been previously support and resistance, and today the market traded to that area and failed at the 106.95 level, a very important level, and we had the sellers closing only just below the midpoint level with a moderate amount of control, but really quite indecisive, where the amount of control that they have is that weak that it's virtually really, we might as well say that the market's quite neutral, that neither side really closed with any substantial control. We did, however, see the sellers lose quite some commitment as they tested down at lower levels, especially the 105.31 level, which has been an important level previously, where the market has tested below and failed to close down below only on one occasion from 1, 2, 3, 4, 5, 6, 7, 8, and this is the 9th test of that level, a very, very strong level. But we also tested to the window that was opened, and I highlighted that window quite some time ago, back in mid-February, where the window, which is basically a gap in candlestick charting. Some people actually have the false idea that a window in candlesticks is a gap between the bodies of the candles. That's not correct. It's the normal type of gap between the range of candles or bars that we see with normal bar charting. But with the candlestick charting, they're much more significant, and they tend to hold as areas of support or resistance, and in this case that area is holding a support. Now that window was closed some time ago, but the market failed to close down below there, so even though it was closed, a closing candle below there would have negated that support offered there, but we can see how it's held on 1, 2, 3, 4, 5 and now 6 occasions where we've had very strong rejection from that window, very strong price rejection, and that window is probably the most important feature on these charts at the moment. That window extends from 104.50 up to roughly 104.70. So for tomorrow's trading, if we do see the market test down below there in a bearish way, and we do have a close down below there, we could see the market close substantially lower over the next few days because of the generally with support and resistance areas we get a vacuum develop on the other side, and we can get a very sharp move in the direction of the breakout. But first, before that, the market will also need to test the 105.31 support level, so that's an important level as well. In terms of the upside, this 106.95 level is very important too, and it's held on quite a few occasions as well. Now if you look at the pattern that the highs and lows are making as well, we actually have the peaks moving lower for the previous 3 or so peaks, and then the troughs moving higher as well. So that means that the sellers are accepting lower prices while the buyers are accepting higher prices. So we're going to meet somewhere in between, and the market is moving to equilibrium in bigger picture terms as well. So when we have a breakout above or below these peaks or troughs, that could be quite substantial as well. In terms of Ichimoku, the market is trading above the clouds, so we have an overall bullish bias in big picture terms, but the market's now trading below both the Kijun Sen and the Tenkan Sen, so it's bearish in the long-term and short-term time frame. The Chikou span here is below the corresponding price action, so that's supporting the negativity that we're seeing in the faster time frames, but not in the longer term time frame. And this is the first time in a while that we've seen the Chikou span cross below the corresponding price action, so that could be significant, and it could be forewarning lower prices in the near future. As I've said, with the flat Kijun Sen, that tends to attract price action, so we could certainly see rejection from the 105.31 and from the area of the window back up towards the 106.95 region. We wouldn't need a decent amount of upside momentum for that to happen, but basically we're seeing a market that's where the perception of the buyers and sellers is narrowing quite rapidly. We do need to wait for a breakout in either direction. There is substantial support down below, but also substantial resistance above.